Hi there and welcome to the Efficient Private Clients Quarterly Review for the second quarter of 2023. My name is Christiaan van Wyk and I'm a Portfolio Manager at Efficient Private Clients. So the second quarter of 2023 has been another volatile quarter in financial markets all over the world. We entered the quarter on the back of a US banking crisis. We still saw record high levels of inflation. So central banks had to increase their interest rates to try and combat the inflation, which created additional fears of a potential economic slowdown or even a recession. The second quarter started off on the back foot with the US banking crisis taking most of the headlines. Market participants feared that this could be much more widespread than initially anticipated, and luckily this was not the case, with most policymakers stepping in quite aggressively, increasing the deposit caps that investors had within the banks and also adding further liquidity to the banking sector. We've seen that in the last week of the quarter, the Fed released their results from the stress tests that they did in most of the major financial institutions, and all of the big banks passed this test, which means that this has definitely not become systematic and most banks are in quite a healthy state. We've seen some encouraging improvements in the inflation figures throughout the globe, and with inflation coming in lower and lower month by month. From the US, we saw the latest print coming in at 4%, which is a major improvement from the 9% that we've seen in the prior year. Unfortunately though, it's quite far away from most central banks' target rates, which means that rates might have to stay high for a bit longer. In the UK, the story is a bit different, unfortunately, with their inflation proving to be a bit more sticky than most anticipated, meaning that the Bank of England might have to raise rates from this point going forward. In order to tame some of the inflationary pressures that we've seen throughout the globe, central banks had to dramatically increase their interest rates, which put a lot of pressure on both businesses and households. In their latest meeting, the Fed decided to keep their rates on hold for now, something that we agree with, to rather wait and see than to over-tighten. Thankfully though, we've seen a very resilient US labour market, which created a strong consumer. A lot of the companies actually surpassed their estimated earnings, which can be ascribed to the very strong US consumer we've seen this year. Looking forward, things are a bit less clear. With the full effect of interest rates being filtered through to the economy, recession fears will most likely increase. In China, we've seen some disappointing second quarter economic data. It seems that the Chinese economy will take a bit longer than most anticipated to fully open up post-COVID lockdowns. An important part of this reopening will have to be government stimulus to get the economy going and to reach the 5% growth goal that they set for 2023. Moving over to the financial markets, we saw most of the global equity indices ending the quarter higher, with most of the gains coming from a handful of technology stocks. Artificial intelligence, or AI, was the buzzword for the quarter, with most AI-exposed businesses, such as software developers or chip manufacturers, seeing significant gains in their share price. The outlook, however, remains a bit uncertain. We've still got high level of interest rates, inverted bond yield curves pointing to a potential economic slowdown or even a recession, and valuations not fully reflecting a slowdown. This is why we always recommend an active approach to investing, where the investment manager can pick the correct type of stocks at the right price. Thank you very much for listening. That was your Efficient Private Clients Quarterly Review. As always, if there are any questions, please feel free to contact